Hey guys, I had a couple of requests coming in from people who wanted to see more examples of how to spot market maker buy models and sell models using gold back levels, right? So I'm gonna go over a few examples here. Okay, and let's see if it makes sense. So first of all, we need to find an unfulfilled range. Okay, what it means in simple language is a swing high or a low that is not taking a proper support of a GB level. Okay, so if you just look at every swing here, so you can see this swing you're taking a support of a GB level. Okay, so all these swings are touching the GB levels and getting rejected from there, getting support, getting support, getting support. Okay, so we can look at one example where it is not taking a proper support. Okay, let me check. So we can look at this, right? So this is not a proper support. If I zoom in a little bit, so we spiked a little bit above the GB level and then the market went down. Okay, so this is an alert for us that this is a fake move, right? The real move is actually the up move, but we want to wait for that up move to start. Okay, and how to predict where this up move can begin from. So just look at what is the GB level that we missed to hit, right? So we touched 29, we broke 29, but we missed to reject from 41. Okay, so this was in between 29 and 41. So we are going to expect reversals to happen. That is where the smart money is going to reverse. Right? So we are going to expect a reversal from 41. So all this liquidity was purged, and you can see here the market reversed from 41. Okay, obviously we cannot know whether this is the actual support. Okay, so this kind of gives you a clue that since there is an unfulfilled range here at just below 41, this could be the smart money reversal. But here you can deploy model 2 and try to take advantage of this trade. So what does model 2 says? Just look at the external liquidity here. So external liquidity is 41. So you find an FVG at 41 or 59. So you can see this FVG was at 59. So you can enter the trade here. And now you know the market is coming to fulfill this unfulfilled range. So you can come back and wait until, hold your trade until this high is taken. So the market maker concept is also the same. So you will have a consolidation and then market creates a fake move or that would be called as an inducement. And in this case, this was an inducement to sellers. And then once we reach a point of interest, the smart money is going to reverse. Okay, so that may be on a higher time frame. It could be an order block. It could be a fair value gap break or whatever. But we are not going to look for any of those things. We're not doing a higher time frame analysis. Just with GB levels, we can predict where the smart money is going to reverse and what are they targeting. Okay, so if we had entered here in this FVG, this would have been almost around 47 handles. Okay, so let's look at this. Now this is also your unfulfilled range. Now apply the same concept. So we didn't reject from 71, but we broke through 81. Right? So we can look here. So 29 we did. We could have anticipated rejections either at 71 or 29 because those are your opposite GB levels. Okay, so 29 we could have shorted, but we did not come all the way to take this original consolidation. We danced around a bit, then came almost close to 29, and this swing came and broke this original consolidation. So again, here you can deploy model 2 to take a trade. You need not wait until this low is taken. Okay, so once you see there is an unfulfilled range and you are seeing a rejection from the opposite GB level, you can take a trade and ride the trend, right? Maybe whatever your daily goal is, if that is achieved, you can exit. Or even if you had held it till here and if it didn't, you could always exit at break even. Okay. Or you could play opposite GB level to GB level, right? So from 29 to 29, we could exit. But the concept still remains. We went almost till 29 here and then came back to hit this 71. Okay, let's look at, see if there was any other examples that I can show you. I think there was one at Euro USD. I'm going to show you that. So we can check here. I don't know, I saw somewhere yesterday. I should have kept a screenshot of it. Let's see if we get here. So you can see here, right? So this looks like a consolidation, and this was not when the price came down here. This is not a proper rejection from a GB level, right? So fake move to induce sellers, and the way the price is moving here, you can see this is not somewhere a smart money is involved, right? It's pretty slow, and it's you can see the back and forth action with the green candles as well. So this is somewhere you know that this is going to be a fake move, and this is your original consolidation from where the price started to drop, and this is your unfulfilled range as well because we didn't take proper support. So this is between 17 and 29, so we failed to reject 29. So once you see support at 29 here, this is where you could long, hoping to clear these original consolidation which we did here. Okay, so that would be a good 25 pips. Okay, it's not going to work all the time because there are other factors involved. Uh, it's not going to be just the market is not only looking for unfulfilled range and the market maker models, right? So if it fits with the narrative, the daily bias, and even with the GB levels that are in play, the model 1 or model 2, you can use those along with this unfulfilled range concept to take a trade. and a few more examples. So let's look at this unfulfilled range. So this is between 29 and 41. Okay, this is also not a proper support, right? So you can see the candle spilling. So I would not consider this. Okay, keep finding these kind of examples to take a trade. But the overall concept is that normally the price is going to take support of a GB level when moving upside or downside. Right? The moment that it doesn't take, that's your unfulfilled range, and you should always keep a note of it. And when we take a support from the opposite GB level or the same GB level in the next dealing ranges, that is where your opportunity lies to get into a trade. And as I said, combine that with the models that you have already learned or any of the ICT is teaching, then that's a good trade for you. Okay. So hope this couple of examples help. I'll try to post some examples through chart whenever I find it so that you guys can go over it. Okay. Thank you so much.